The real difference among whole, term, and universal life policies. Thank you for watching Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. Please, make sure you subscribe to our YouTube channel and hit the notification bell so you can be notified every Tuesday and Thursday we come out with brand new videos. Stay tuned to the end of the video and get a valuable tool today which will bring you your financial freedom faster than anything else, we promise. So, today's topic is the real difference among whole term and UL policies. For the sake of simplicity, we're going to divide our video into two sections. In the first section, I'll define in simple terms what the meaning of term life, whole life, and universal life. And in section number 2, I'll go through the benefits and features and the differences between these three life insurance policies. Term life, it pays a benefit in the event of the death of the insured during a specified term. Whole life, it provides coverage for the life of the insured while building cash value inside it. Universal life, it provides coverage for the life of the insured with a flexible premium option. Let me give you an example which will make it easier for you to understand the difference between these three, and also remember it for a long time. There are basically two kinds of life insurance policies, temporary and permanent life. Term life insurance are for temporary coverage, like 10, 20, or 30 years. For example, you bought a term life insurance for 15 years. Once that period is over, you do not have any more coverage. The reason people buy it is basically because they're cheap. For a small amount of money, you can buy a lot of death benefit coverage. And it does not build any cash value, because it does not have any savings component built inside it. Say for instance, you rent an apartment, live in there for 10 years, then you leave. During those 10 years, you kept on paying your landlord a rent each and every month, month in and month out. You paid him for 10 long years. And now, when you get out of that apartment, he does not owe you anything. And that is exactly like buying a term life insurance policy. You have the coverage as long as you're paying them rent. Once you're out, it's done. All your money is gone. Now you have to start it all over again. On the other hand, think about this scenario. You bought a house, you paid the mortgage to your bank for 10 long years. Now you have some equity built up in the house. And that is exactly like buying a whole life policy. As the time goes by, it builds cash value inside it. Just like if you have a 15 or 30 year mortgage, once it's over, you own the house. Moreover, a whole life policy has a guaranteed compound rate of interest for all these years, and also you have the possibility of getting a dividend check at the end of the year. Now, I think you have some basic idea about the difference between a term life and a permanent life. By the way, both whole life and universal life falls into the category of permanent life insurance. Let's put it like this. A whole life insurance offers consistent premiums and guaranteed cash value accumulation, while a universal policy provides flexible premiums, death benefits, and a savings option. Now, a little more about universal life policies. In the 1980s, when universal life insurance was introduced, it became an overnight sensation, simply because, as they said, it was a bridge between whole life and term life. In other words, it's a permanent life policy which goes for the rest of your life, and also, it gives you some flexibility to pay your premiums. You can increase or decrease your premiums based on your good times or bad times. Now, if you browse through your computer, you will find a Wall Street Journal article published on September 19, 2018, which says, Universal life insurance, a 1980s sensation, has backfired. It continues, a long decline in interest rates caused premiums to soar when they were supposed to stay level. As the Wall Street Journal reporter named Leslie Sissom continues, a popular insurance product of the 1980s and 1990s has come back to bite many older Americans. Universal Life was a sensation when it premiered, and for some years it worked as advertised. It included both insurance and savings accounts that earned income to help pay future costs and keep the premium the same. But once the interest rates in the market went down, it caused the premiums for universal life insurance to soar, which created a problem for many older Americans. Unfortunately, these people had thought that they were building a permanent life insurance policy with the flexibility of premium. One thing that was never mentioned to them was that premiums can go up based on the market fluctuation. And now after paying the premiums for 20, 30, or even 40 years, these people are out of luck. One of our 76-year-old clients told us recently, by buying this universal life policy, looks like I gambled with my life and my family. I bought it so many years ago, I paid them monthly premiums for several decades without fail, hoping it would build some cash value inside it, and also I'll having life insurance coverage for the rest of my life. But now, due to this market fluctuation, I cannot afford to pay the premiums because they're so high. And when I called the insurance company, they said I didn't have any cash inside it. I'm devastated and I don't know what to do. And you know what? It is hurtful. If he would have bought a guaranteed interest and dividend paying whole life policy for all these years, what do you think it would have been valued at today? You do the math. For me, when it comes to money, primarily I go for two things: simplicity and guarantee. Just think for a moment, why some people like their bank CD so much more than any other investment? Do you think primarily because it's simple to understand? Because it doesn't have so many moving parts? Because it's not complicated as to understand market fluctuations, indexes, and whatnot? And secondly, the reason they love it is because it's guaranteed. If a bank CD promises you, we will pay you so much of interest, you are dead sure that you will get that interest at the end of the term. No ifs and buts. But the only problem with the bank CD is these days, it is paying next to nothing, right? So what's the solution? A traditional whole life insurance policy with the concept of infinite banking, a whole life policy insures your life. So when you check out of your life, the money will check in to take care of your loved ones. I'll say it one more time. When you check out of your life, the money will check in to take care of your loved ones. And that is the death benefit. Infinite banking concept goes one step ahead and focuses more on your living benefits. We construct your policy the way that it accumulates more cash inside it than a traditional whole life policy. How? By focusing more on the cash value than the death component. And on top of everything, you can have access to as much as 90% of your money from day one. Here's a quick story of one of my friends. How they were able to get rid of their $6,000 credit card debt that they owed to a credit card which was charging them 29% interest. They bought a whole life policy and dumped $10,000 as their annual premium. Then they turned around and after 30 days took out $6,000 from their policy as a loan and paid off their credit card. Now they can sleep better. So, to recap, a term life insurance policy just covers your life for a certain period of time. A whole life policy is for your whole life, with a built-in cash value accumulation component. And a universal life is in between a term and a whole life policy. Now, I know what you must be thinking. Where's the bonus tip for the day? In my last video, where I mentioned the word photo reading, some of my viewers asked me to throw some more light on it. So here's a brief description of photo reading. You all know or heard about speed reading that you can read up to 3,000 words per minute. But in photo reading, you can read up to 25,000 words per minute. How? Because you read it through your subconscious mind, which is how you can finish a 200-page book in 10 to 15 minutes with 85% comprehension. And the reason I mentioned about it is because the best way to make money is to become a student of finance. And through photo reading, you can read an enormous number of books in a year. Like they say, to earn more, you need to learn more. Just Google it and you'll find all the details about photo reading. Now, I have a question for you. What is the one thing you got from this video today? Please let us know. Thank you for watching the video and we hope that this information was helpful. Also, if you're worried about paying your debts and creating a source of perpetual passive income, we have a free book called Infinite Banking Secrets, where we share different ideas on how you can utilize your whole life insurance policy to achieve your financial freedom. So check out the link below and visit our masterclass. And if you're impatient like me, you can go ahead and book a one-on-one free consultation over Zoom. It's a pro bono service because we love to educate people like yourself, and you don't need to buy anything at the consultation. So, book a free consultation with us by clicking the link below in the description. And don't forget to download our free book called Infinite Banking Secrets. If you like this video, let us know by liking it and leaving a comment for us. Don't forget to share it with your friends and family and subscribe to our YouTube channel. And hit the notifications bell so that you're notified when we upload new videos.